Hello guys and welcome to this lesson. We are meeting again in the second part of the lesson of ethics. Today we are going to tackle the ethical reporting principle versus the ethical dilemma. To start with, let's get reading this introduction. Ethical reporting is the process of transparency, professional, and ethical conduct is the intent to be honest, accurate, and complete when providing required information. In reporting, misrepresentation by both errors of omission and commission, as well as by conflict of interest, may create ethical issue. So the adherence to professional obligation and standards in the code is essential to minimize a possible ethical issue. Whereas an ethical dilemma in accounting arises when an accountant encounters a situation where professional responsibilities conflict with ethical principles, which means that he should decide between two situation between his profession versus his ethical principle. So let's get reading these definitions. An ethical dilemma in accounting is a situation where an accountant, as we say, or an accounting professional encounters conflict in a moral principle, professional obligation, or between personal and professional value. Here, the employee or the worker should decide where to go, even he choose his position or his work, or he is going to choose his principle or his moral. So often requiring complex critical judgment to resolve some problems. So accountant may face various ethical dilemma throughout their accounting practices. Here we are going to see some examples. The first example is the client pressure, and the second one is a conflict of interest. What we mean by a client pressure? Clients or a customer may often pressure the accountant to manipulate or misrepresent financial report. As we know that there is some financial report that is presented by the firm, like the cash flow, the balance sheets, and so on. So here, providing a conflict between the professional obligation to report fairly and the client requirements. The second example is the conflict of interest. An accountant here may encounter a situation where personal interest or a relationship could influence the professional judgment and will be create like a conflict between personal and professional ethics. Now, here there are some steps in order to handle some ethical dilemma or some ethical issue in accounting. Facing an ethical dilemma can indeed be challenging, so here are some key steps in order to handle this situation effectively. The first step is to identify the ethical issue, which means that you have to recognize and clearly define the ethical dilemma. Therefore, you are going to identify the ethical principle involved and the parties affected by this dilemma. The second step is to analyze consequences. Here, the accountant are going to evaluate the potential outcomes of various courses of his actions. The third step is to consult ethical standards. Here, he is going to review professional ethical codes and guidelines to determine what they are recommended in such situation. The last step is to seek advice. He's going to reach out to mentor, advisor, or use an ethics outlines if available. Here in this case, accountants, they need to see someone in order to give them advice in order to make things clear for them. Also, we have another steps that may make it easy for them, which means to make a decision. Okay, so here is based on all the information and advice gathered from the other side. The worker or the employee can make a decision that best align with ethical standards and promote the public interest. Also, there is a reflection. After he's taken his decision, he may notice or see the reaction or the reflection on him. Also, the reflection on his career. So, for avoid it in the next time, or for take it again if it is right. So, after a decision has been made, reflect on the process. What could have been done better? Here, the reflecting can be helped in order to improve future ethical, as we said, or it can help to improve future decision-making processes. And for ensure more efficiency in accounting operation, some accountants using auditing. These steps or this operation is an important part of the financial world. That's because a company financial health and well-being can't be upheld without proper accounting. So the routine here or the routine audit ensure that companies are following reporting standards and more importantly that they are being truthful and honest about their financial position. So auditors are particularly important for the shareholders, for the lenders, for the investors, as well as for the consumer and suppliers also. So I will give you some processes of auditing that helps companies in other ways, like including finding efficiencies. It may help them in improving production and operations. It make them meet some compliance requirements, as well as establishing procedure for monitoring. Also, and the specific point is help them in order to prevent some frauds. To end this lecture, here there are some accounting acronyms about finance. The first one is GAAP, which means Generally Accepted Accounting Principle. We have CPA, which means Certified Public Accountant. We have AP, which means Accountant Payable. IR, which means Accountant Receivable, and so on. You are going to read them and take note and be sure that to repeat the video again in order to understand well.